Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily and weekly charts and instead concentrate on the longer term view, using my monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, let me now introduce today's longer term chart.
Today I'll be looking long term at New York sugar. In November 2023, the market reached and even exceeded slightly the final topside target from a series that started from 2019 to 2021, the diamond bottom, and the bullish halfway hesitation seen between late 21 and 2022. After all this, prices instead chose to drop away in a 2 steps down and 1 step up action from the start of 2024 through to the end of August 2024. In falling, the market had constructed a double top pattern over 2023, an Adam and Eve type double top. The primary target for this fall at 1880 was reached by May 2024, and that still left the secondary and hard to reach target X3 down at 1660, still alive and open. Over the course of 2025, we saw prices gradually edge down towards the target, reaching it in June and carrying on lower since. In a move lower, the market overcame some significant supports that are now resistances. The first of these was the 5-year moving average, currently at 1969. Then there were the two separate 50% Fibonacci lines. The recent 50% Fibonacci line for 2023 move at 1860, and the significant 21st century 50% absolute Fibonacci line at 1809. Now these tried slowing the decline, but they never seemed capable of changing the direction of the market. Indeed, last year I said, and I quote, "The key I suspect will be whether prices can sustain the lows of 2022 in the 1720 to 1740 zone. If they cannot, then not only will target X3 at 1660 be achieved, but the lesser Fibonacci lines at 1634 and even the 61.8% 21st century absolute Fibonacci line at 1383 will be under threat." End of quote. That was a year ago, and as you can see, we have been threatening that 61.8% Fibonacci line at 1383 since October last year. I would also note 3 other things which I think will be important going forward. Firstly, to show the bearish angle of attack, I've drawn here a late 23 to late 24 dark blue bearish Andrews pitchfork. Those familiar with my weekly New York sugar commentaries will be familiar with this pattern, as I've championed it throughout 2025, and it's been very successful at showing the bearish angle of attack. The market is right now in between the dark blue lower time below, which is currently at 1332, and the dark blue upper time above, currently at 1664. With regard to this dark blue upper time, I also note how we have the 1-year moving average, currently at 1638, paralleling it and providing additional overhead resistance, as it has done since at least the start of 2025. It looks like formidable resistance, but if you really wanted to break higher, nothing would be sweeter than taking both of these two out simultaneously. Finally, we are now coming within range of the congestion below, seen between late 2014 to early 2016, and again from the greater depth and force between 2017 to late 2020 that stretched below the 61.8% Fibonacci line at 1383, all the way down to just under 10 even. Does the overhead bearish pressure look enough to take this one? Right now, I don't think so. If the fall continues, but fails to push below the main low here, the April 2020 low at 905, then we would have set up conditions for a possible revival higher. However, we would still have to push below the 61.8% Fibonacci line at 1383, and I would suggest we'd have to push by some considerable distance before we could consider that as an idea. Two final points. I note below the emergence, and potentially soon to be in the frame, bright red 1999 to date uptrend, currently at 954, and the bright green 1985, yes, two last century updates, uptrends, the green 1985 to date uptrend, which is currently at 840. These are far below right now, but with any decline below 1383, they might start to look interesting.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.